Aren't there not good enough exciting investment opportunities in the STR space?
The winner is going to be a company that has a broad suite of solutions and is not going to be just a point solution.
Would you still invest into Airbnb today?
That is typical of this industry for a long time. It's not a rapid adopter of technology.
How much did that harm the entire STR vertical as such?
If you think you have an incumbency position and you're slow to invest in AI, do that at your peril.
You are listening to STR Global Unlocked, brought to you by AJL Atelier, the show where I speak with the leaders shaping short-term rentals worldwide. I am Simon Lehmann, and after 2 decades buying, selling, advising, and investing, I've built a network that spans continents and categories. This podcast brings that network to you. Real conversations, global insight, no PR fluff. Let's get started. Today, I'm thrilled to welcome someone who has shaped some of the biggest stories in the global tech investing world. Woody Marshall is a general partner at Technology Crossover Venture, one of the most respected growth equity firms in the world. Woody's fingerprints are on household names across internet, software, and fintech, including Netflix, Spotify, Facebook, Peloton, Airbnb, early peers, and of course, HomeAway, which is now called VRBO, where TCV was one of the key investors before the $3.9 billion US dollar exit to Expedia. There's a personal story here. When TCV held 2 board seats at HomeAway, Woody made the unusual move of handing one of them to me, and that's the way how we first met. And I've always admired the conviction and the long-term perspective he brought to that investment. One thing I remember exceptionally well in one of the board meetings we had in Austin, together with the executive team, Woody made it very clear when we talked about internationalization of HomeAway, as long as 3/4 of the revenue is not coming from Europe, we're not an international business. Woody, welcome to my podcast at STR Global Unlocked. It's so great to have you.
Yeah, thanks, Simon. I appreciate it. Those are nice comments. I wish more people said nice things about me like that.
I'm sure they do. Without a doubt. While we have you on the podcast, we really want to dig into some, looking ahead in terms of tech. You guys are looking at a lot of technology, AI, and the investment appetite. And let's start with the big picture. Since your investment in Airbnb and HomeAway, you guys haven't invested into the short-term rental for a while. But when you look at TravelTech today, what feels genuinely exciting from your side of from your point of view? Aren't there not good enough exciting investment opportunities in the STR space, or do they not compare well with other things that you guys get excited about at TCV?
Yeah, it's a good question. And if you actually take a look at the history of TCV and our investments in travel, because we've been investing in travel for the vast majority of our 30 years. This is our 30-year anniversary in 2025. But in our 30-year investing history, there was an evolution, right? So initially, if you looked at some of our original investments, Expedia being one of the big ones, that was when the world was moving from offline to online travel purchases, and it was broad-based. Actually, the way we got to Expedia initially was we had made a small investment in vacationrentals.com, which was purchased by Expedia. So we were, when you think about the STR space, we were certainly at the bleeding edge even before the HomeAway VRBO investment. And then over time, the evolution has happened. You didn't have just opportunities to play the massive shifts in overall travel, but then there were certain verticals, that popped up. I would argue the big driver of value at Expedia during our hold was hotels. That was, primarily early on, it was, if you looked at the OTAs, air was what got people excited. Hotels was a little more complicated. Obviously, Expedia had rolled up a lot of the players in the space, hotels.com, et cetera. The evolution of that moved, to the alternative accommodation space. Initially, we made the investment in HomeAway. And if you looked at the world at that time, it was remarkably fragmented. Here's the largest player, great investment, obviously, great trends. By the way, massive business today. Then The next investment we made was Airbnb. Airbnb in many ways was creating a market. Certainly in the, if you looked at it, HomeAway was taking a traditional industry, the vacation rental industry, and moving it from classifieds, offline classifieds to online. That was an opportunity that Airbnb had, but they were also doing it by driving a new market, initially like the couch surfing market, but also pushing into city content, which was really a hotel, competitor. That was not something the vacation rental market had really done before. And so that was like the first, cut for us, which was a lot of very consumer facing, opportunities. The one consumer-facing opportunity that we have played, we still have, an investment in the space, has been experiences, right? So, when you think about markets that we've always liked is what is a remarkably fragmented market where, as a market player, not only helping to consolidate in one place the information and the bookability of a very distributed, service, but you're also providing, some validation of the quality of an end product, et cetera. You and I think have talked about this. I was the cover bid when TripAdvisor bought Viator back in the day. But if you look at the experiences space, that's totally it today. It's still very offline. It's still remarkably fragmented. We have an investment in Klook, which is the leader in Asia. And interestingly, when the new investors came in, they put Mariano Dima, our old CMO from HomeAway, on the board. So I see you get to connect with Mariano a lot. But that's like from the consumer side, like those have been some of these big shifts. The other areas that we have spent some time investing in is, and then I'll talk about what else I think is kind of interesting today. But if you think about the travel technology world, you've always had these big behemoths in Amadeus and Sabre. So what about those models with newer technology today? I even think about it as, if you remember the TravelTech business, which was software and marketing services primarily for the hotel space that Amadeus bought. It's what is the next generation TravelTech. So we've invested in, a number of businesses, Sojourn in the marketing services space. We've been invested in some other things over time, but I still think, if you look at the landscape of travel technology, in the world of operating support systems that help you manage your business, as well as how do you acquire customers, especially in the hotel space. I will definitely put the alternative lodging space in there, because as it gets more mature, I think owners of those types of properties will look at solutions similar to like how a hotelier might. And those tech markets are remarkably fragmented. I think over time you will see, a consolidation away from, just a lot of integrated point solutions to a fully unified suite. So that is one area we have, made some investments more recently. If I look today, obviously AI, can be fundamental across the world in every industry. But when you think about travel, any kind of AI driven personalization, itinerary planning, there's a lot of discussion around what do you actually need marketplaces for if AI can go out and find, the best content for you, find your lodging, deal with your air travel, deal with your ground travel, suggest experiences, and bring it all back to you in a bookable way. Something like that can be remarkably disruptive to the industry today. So we still love the travel space. While I think we have not made any investments that have been very specific to short-term rentals or the alternative accommodation space, a lot of the things that we've looked at in technology solutions, improving both the operating side of it as well as the customer acquisition side, especially customer acquisition side away from Google, Expedia, or Booking, being kind of some of your primary, markets. Those are still solutions that we find interesting. That was a mouthful.
Yeah, that was a big mouthful, and I need to structure my question coming back to you, but I think I want to turn the wheel back a little bit more and be the devil's advocate and say, hey, Woody, when you invested into HomeAway, you invested into a classifieds business, right?
Absolutely. I mean, if you looked at the functionality, it was slightly better than, well, it was better than, the printed brochure that you would find when you walked out of the grocery store that was in that wire rack that would have local vacation rentals. Early on, the functionality was not there. You weren't the system of record for a transaction. You weren't validating, identity or authenticity in any way, shape, or form. But at the time, that was a step forward. But that was a long time ago. I mean, the
No,
first
of course. But while you've been an investor a long time ago, you went through quite a bit of an evolution as well with that investment. I guess TCV made it able for HomeAway to acquire VRBO with the check that you wrote at the time. But then you started to also, over time, realize what this industry was all about. And what did you, like, besides the classical classified business that you tried to digitize with HomeAway, Carl and Brian, what other conviction have you built? And I guess that was one of the biggest learnings. And we're focusing on the short-term rental audience here for them to understand, where this has come from and what were the challenges along the way, and to see now where HomeAway or these large players, Airbnb, Booking, Expedia, are with platforms like.
Yeah. So one point of clarification, financing for VRBO, that was the financing that John Morani and I did when we were at Trident Capital. That was '05. That was the first one there. When I came in at TCV in 2008, we did fund some other acquisitions, a bunch, in Europe. Look, if you think about what we saw was you had a brand. And by the way, the brands in many, as you know, the way that Brian and Carl did it was they got big fast by consolidating a number of players that were out there. So you were leveraging your micro brands, the brands in different geographies. The opportunity was, and again, the cost of building, a really interesting customer interface and UI was expensive. Little companies weren't able to do that. Remember, the iPhone, was 2008, 2009 to 10, like that was when it was coming to bear. Initially, it was a web-based business. So the world totally shifted, obviously, for many companies as you went to mobile. And the dynamic was, if you start with the most content, like you are remarkably well positioned, but you also have to build the best user experience. Because if you compare and contrast VRBO, HomeAway to Airbnb, Brian and Carl got big very quickly based on consolidation of an existing market. What Chesky did was very different, which was, we're going to go after a market that really doesn't exist. We're going to enable it by building, a great product. They were always very, very product focused that leveraged mobile in many ways. So there were different strategies for different times. Over time, they've come together. I mean, I don't think the content is materially different. HomeAway or VRBO probably has still a little more vacation content today, than it used to. But I think the opportunity was, do you believe that having access to that supply, which was very fragmented, that was something that you could build long-term customer relationships off of? And again, like, the opportunity, and this is, I think, what Expedia saw, was this is part of a customer's travel solution. It's not the be all end all. Now, by the way, it's a big enough market that, what did Airbnb did, 80 plus billion of bookings, in 2024. It's not a niche, right? Or if it's a niche, it's a big niche because travel's big. But like, the opportunity is still much more broad than that.
So looking at facing in a little bit deeper on the STR compared to other tech verticals that you guys have looked at, or even completely different verticals, you look at the SaaS or fintech, where does it stack up well and where does it fall short? I mean, it seems that there hasn't been the right opportunity while we see a lot of capital flowing into the tech space at the STR industry, like Hostaway or Guesty or other platforms have done some significant capital raises and recapitalization as well. How does that stack up and compare to some of the industries and verticals that you guys are looking into to make investments?
I mean, I think travel in general is one of the largest, if not the largest discretionary spend categories. It's global. So we still spend a tremendous amount of time. Alternative lodging, the STR space is a massive slice of that. And, I look at it today as, some of the companies that you mentioned, those software solutions, for many years, software solutions have been sold into the hotel world, and the world was viewed hotels very, very differently as in the short-term rental market. But there's been a convergence, certainly of functionality. I mean, if you look at supply, think about it on the hotel side. You have the big chains. You have operators that may own, mid-size operators that may own, a handful of properties. And then you have, companies that may own, you may have a flag with a particular hotel chain, but the operations and the driving of traffic and customers to your location is the property owner's responsibility. That maps well to the where I think the supply has evolved on the STR side, right? Big property managers, you have small regional sized property managers, you have folks that own a number of properties, and you also have the sole property owner that is owning their one property, which very much looks a lot like kind of a one unique boutique hotel in a typical location. So the dynamic is, as those tools come to just in the way that they've improved the hotel world, that's the massive opportunity in the STR space. So we look at those as actually quite attractive, opportunities. And obviously everything is situational, which is like, do you like the solution, the momentum that a business has? Obviously with investments, you have to, you answer the question, is the race worth running from a valuation standpoint? But like, these are definitely opportunities that we spend a lot of time looking at because it's a massive part of a massive industry in terms of travel.
So let's dig a little bit deeper here, Woody. That's super interesting. We have a lot of founders and entrepreneurs for SaaS and tech companies in the STR space listening to STR Global Unlocked. And I think you alluded already to one in terms of some more detailed metrics. We talk about valuation of assets all the time in terms of, like, obviously a PMC, a property management company, is differently valued than a software business. We talk more about annual recurring revenue, ARR multiples versus EBITDA on the PMC side. And that's interesting. And we've seen some crazy valuations, name it PSG in Hostaway, but also Axel KKR, Guesty. They're close to unicorn companies now. And that fuels expectations from a lot of tech founders and others and think, I'm getting there as well. And then obviously we need to start putting some perspective in and say, well, that's not that easy that you can get a 17 multiple or a 12-time multiple, while this is more a cybersecurity multiple and not a SaaS business in the vacation rental industry. Can you shed some light on that? And
yeah, absolutely. So I'd start off by saying when we invested in HomeAway, people thought we had top-ticked the valuation, and we made a very solid return. When we invested in Airbnb, people thought we had top-ticked that valuation, and we made a really attractive return. So it's easy to use words like, well, that was a crazy valuation. But you don't know, right? Here's my, the viewpoint is, and certainly if you look at tech solutions into, hospitality broadly defined, right? Lots of point solutions. There's not the adoption that you would expect. There is massive opportunity for a player to step up into the leadership category. Again, remember, there aren't Amadeus or Sabres of this, with newer technology today. So I think the position to be a leader, whether it's TravelTech or just, the alternative lodging space, there are no obvious, leaders, sitting on the, in that on top of the podium. And I think the size of that prize is significant. Because if you take a look at the companies that you mentioned, their viewpoint on the suite of product offerings that they can provide is meaningful. So, again, the way that at the end of the day, valuation comes down to, what your forecast for growth is. And at somewhere in the future, you can talk about revenue all you want. It's somewhere in the future, the companies are going to trade at whether it's net income, free cash flow, EBITDA, something like that. It's going to be some sort of proxy for, for profitability. Now, software businesses at scale that are efficient, that have recurring customers, like if you would take a look, the data would suggest over time, those businesses will be very profitable. Go to the STR space. If you look at marketplaces, same dynamic, right? So the question is, with any of these, where are you on the growth curve? How differentiated is the solution that you're offering? And then what's your view on the ability for that management team to execute on that growth strategy? And the success of that is what will allow you in hindsight to say that was an aggressive valuation or that was really good. Because, if the world all thinks that something's really, really, really expensive and somebody has a differentiated viewpoint and is right, that's usually a pretty attractive outcome. So it's a good point. I think one of the things you learn as a growth investor is that you always have to believe in execution on the growth side, because that's the way that returns happen. It's not, well, we levered up, like the buyout guys that use leverage to drive equity returns. On the growth side, it's the growth of the business, right? So if you get the growth right, that is typically is the dynamic. And one of the issues there is around how good is the product and how can management extend that product, over time. It is, there's lots of controversy and lots of discussions when something like that happens. But remember, you're talking about lots of very smart investors that if you have a long-term perspective, because that's what you have to do. You have to believe in growth, and you have to believe in growth over a long period of time. By the way, that's not 10 years, but it's not a 2 or 3 year hold.
I want to go a little bit deeper, and the words that come to my mind are defensibility, diversification, and ultimately total market share, right? And I want to expand that to the hospitality world in a second, but let's stay in the short-term rental industry first. So, you mentioned management team, you manage growth metrics, obviously churn, logo growth, organic growth versus inorganic growth, all these amazing KPIs that are super important to scale SaaS businesses. But for me, one thing that is sort of missing in the conversation that I'm having, especially with private equities, when we talk about value creation plans, how can we underwrite the growth? How is that happening? For me, there's very little, in a way, differentiation. And because at the end of the day, a PMS is like an OS for a computer. Either you have a Microsoft or an Apple and off you go, right? And we still find ways in how we can be different. And I would love to hear your view as an investor, and how do you build your defense strategy and how you look at that as an investor? Because at the end of the day, the AGL, STR global technology landscape have 200 PMSs on there.
Yep.
The market is extremely crowded.
Yes. By the way, that's the billion-dollar question, right? Which is just because somebody, has a bunch of customers using their technology doesn't necessarily mean that the conditions precedent are there for that business to grow 10x over a 5-year period of time. Because, again, the market's growing, but it's not growing like it did a number of years ago. And certainly, 15 plus years ago when some of us first invested in the business, where you really had substantial tailwinds, from the market growth. I think the dynamic here, there are parallels to other parts of the, other things that have happened in software. You said it. If you have 200 PMSs, if you have 50 booking engines, there is a salad of options out there, right? Of solutions. And the opportunity is, can someone rise above the noise in terms of market share? And by the way, part of that may just be, that's why this may not just be a growth, just like traditional growth strategy. It will be consolidation strategy as well, because I think that's probably the most efficient way for a company to not only aggressively increase its market share in a particular functional area, but also rapidly expand its product set. Because I do think the winner is going to be a company that has a broad suite of solutions and is not going to be just a point solution. The way that the market has evolved today is a lot of really, really well thought out point solutions driven by entrepreneurs that know the problem really well. If you're a operator, how many different solutions do you have to contract with to have a full set of
The moment about
functional?
6 to 7.
Yeah, you see, that doesn't so some people can look at that and say, this market's nuts. Like, why would you get in it? I would look at it and say, that's a massive opportunity, right? That's a massive opportunity because you look at small business technology, you look at any other vertical market, there were situations where those markets had the same kind of, point solution versus suite dynamic. And over time, that's going to consolidate. So the question is, what drives that consolidation, right? By the way, part of it is somebody that's going to be aggressive at trying to put it together. One of the dynamics you always have with businesses, with industries where there's lots of players and this dynamic is I think everybody thinks that they should be the consolidator. And when that happens, it's kind of harder to, have the dominoes fall. Now, a lot's been written about tons of money invested in companies, exits, whether it's through strategic sales or sales to private equity or IPOs, those have lagged. So at some point, and by the way, I've said this for the last couple of years, that I thought this could be a watershed year in terms of consolidation, not just in this market, but in many other tech markets where there are going to be founders and early stage investors that are going to need to have some amount of liquidity. So I think that is a very, very real opportunity with a growth strategy that's both organic and then inorganic that drives consolidation, driving consolidation not just for increasing, financial metrics, but one that strategically accelerates your product roadmap and potentially even depth or functionality in a particular area, like how do you differentiate a PMS or a booking engine or something to that effect?
Yeah, I think you and I could use a time today to strategize about it. I would have plenty of names in my head and what we can bring together. I mean, we have some very interesting point solutions out there on the PMS side, on the operation software side, and on the revenue management side. But at the end of the day, I totally agree. I mean, that's where the opportunity lies, because at the end of the day, if you're a professional property manager, you want one system, one point solution that solves all the challenges that you have, from distribution, managing the booking, the guest experience, the guest comms, the revenue management, the operation, and everything else. And this is only natural. And it's always so interesting when we do surveys in the industry and ask the property managers, what is your biggest pain point? What is the first technology, right? So we're still in the hospitality industry and we're not in the tech space. So,
Well, by the way, think about it this way. There are and by the way, AI may be a forcing function
yeah, I
where
wanted
people
to
have
ask
to
you about
upgrade.
that.
Yeah. But go back and remember at HomeAway, we had that strategy where Brian bought a bunch of software businesses. And the thing that was the strategy was, here's some, older technology we'll be nice and say older technology.
Escape is still alive, Woody, by the way.
Yeah, I know, but remember, didn't when we bought it, didn't Instant Software still have customers running a DOS platform? Literally, the property manager had a clean room with some old Intel 386 processed machine that you had to literally put a hazmat suit on, because if that went down, the core customer database was gone because nobody had transitioned it. That is typical of this industry for a long time. It's not a rapid adopter of technology. AI may totally change that dynamic.
Yeah, let's talk about AI in a second. Before we go there, I want to talk to you about Convergence and seeing the hospitality space. Numbers tell us today STR makes about 14% of global hospitality in total, which is quite significant when you think about the fact that in 2005, when we started the first surveys with HomeAway, we had 5% category awareness. 2019, we were at 48% category awareness. Post-COVID, we reached 80%, so everybody finally understands what a rental is versus a hotel. Interesting enough is the technology side.
I thought Brian drove that with all the Super Bowl ads. No.
Yeah, absolutely. The Super Bowl ad with the famous family is definitely one of the key drivers. And it was interesting, by the way, in the conversation I had with Carl about while they both these technology businesses, maybe it's time that we're getting the old crew together and make a podcast all together to realign the story, because sometimes it's nice to look back and also provide some context to people who are now working in our environment. But, one thing that I found interesting, as I've been now 2 decades in the STR space, and we started off with building proprietary technology at Interhome and all the other big players like Novasol and Belvilla, all these ancient players in Europe had proprietary tech. Then Vakasa made the crazy decision to build proprietary tech, which obviously didn't fly either. But interesting enough, the hotel industry has sort of sniffed around this space. And let's talk about technology. So I think in the meantime, everybody understood creating proprietary tech as from a property management standpoint is not creating additional value, because at the end of the day, you're not a software business, you're a service as a software business, not a software as a service business. I think with Vakasa, everybody has finally understood there is no such thing called technology driven property manager. Now we're using tech that is out there. There's plenty of technology that helps us to do what we need to do in our space. But interesting enough, if you look at the sheer numbers, the hotel space is significantly larger, and we have seen very little convergence of hotel players coming into our space or the other way around. How do you view that from an outside in, from an investment standpoint?
So it is a very different business, as you know. And if you think about, what the hotels are focused on, which is how do I do, my business more and more efficiently? Certainly with COVID, I don't think, that was like a potential extinction event for a number of, even the larger players, but definitely the smaller players. So where you end up now is companies that, they're efficiently staffed, right? So I think the level of complexity, until you solve this from a technology side, the level of complexity of a, short-term rental, can be significantly more than, a normal hotel business. Over time, it's not that, it's not that distant, but I think, you obviously have some of the, hotel properties that are doing that with, their short-term rental looks like the extended stay hotel kind of, dynamic. Look, over time, whether they consolidate under like a holding company structure or ownership groups, at the end of the day, I would think that if you own a customer continues to come back to you, being able to offer them a full suite of solutions is what you want. And the couple that, needed a hotel room that all of a sudden, used to take their 2 kids, but now their 2 kids have 4 grandkids, the dynamics change and you want to be able to evolve with them. So you can make the argument, of course, they should be in it, whether it's partnership initially or owning it. I think when technology makes the operations and certainly the marketing of this easier, I think that'll be a step, towards seeing a little more consolidation. But I don't, the markets are big enough. Certainly as somebody that invests in customer acquisition solutions all the way back into the core technology infrastructure, that's not something I spend too much time worrying about. I do think the systems will converge to allow that. But, I certainly haven't seen it. You may be having strategic conversations at a different level, at this point.
Just one last question on the hotel side, Woody. But, we're talking this one-point solution also in STR for a long time. But hotels, you
Same
could
thing.
arguably say...
No. It's the exact same. You're starting to see a little more aggressive consolidation. By the way, TravelTech did this. They were one of the first players that was consolidating different software solutions mapped with a marketing solution. Got bought by Amadeus. I don't think that created an accelerated pace of either product development or acquisitions at this point, right? Could, but you've got players like Muse and whatnot that are stepping in because they look at this and say, God, if you look at all other verticals and how the evolution of technology adoption has happened, we're in the early innings in travel. Like you can't, it doesn't make any sense. By the way, I would have thought 5 years ago we would have been further along than we are today. By the way, you had COVID and whatnot, but in 5 years, I have got to imagine you will have a number of players that will rise above the noise, either by organically driving new products or by accelerating that with product M&A.
Super interesting. We could talk a lot more about it. I want to turn the wheel a little bit and go to the service business. And I've alluded to it already. Especially one thing that I want to mention or talk to you about quickly is Vakasa, which was the rising star, raised an enormous amount of capital in the positioning of a tech-enabled property management business, going international. Raising $750 million, making 160 acquisition, was sort of celebrated as the next big thing, and then a SPAC at $4.3 billion USD, and then it sold 33,000 units for less than $200 million to Casago. So my first question to you from an outside-in perspective, from an investment perspective, how much did that harm the entire STR vertical as such?
I think it certainly, if you think about capital flows, if you didn't know the market, that would be a data point that might scare you off. To me, I think the more you know about a market and drivers, that, if anything, that should have just said, look, one of the things with Vakasa, and they were providing a lot more services than others, but it was expensive. Like if you were a property owner, that was a costly channel for you. Granted, you didn't have to do much. So one of the dynamics you have to think about, this is in the STR space, is, from full service, high fee to, low service, a la carte, lower fees. Where do you think the market's going to be? And by the way, during COVID, I think many industries got false positives on a lot of things. And I think the alternative accommodations, short-term rental market was certainly one of them. Because when the world got to the other side, everybody became really conscious of what they were paying, because you weren't in like this, full occupancy, totally booked solution. By the way, to me as an investor, yeah, great. I'd love it if, there are folks that are like, oh, that market seems too complicated, I'm going to stay away. Just less competition for the rest of us. But if you actually understand the dynamics, it shouldn't be an issue at all, right? Lets you understand different business models, different choices. I mean, like at some level, any of the marketplaces is a P times Q, price times the number of units, right? Like our view was always, we wanted to be in the biggest, like HomeAway, Airbnb. Like, yep, their take rate was not as big as some of the other specialized players, but it was going to be massive. You had something for everybody, whatever product, whatever geography. And by the way, I think it's a totally sane strategy to say, we're going to focus on something that's, adventure sports, like certain regions. You can go deep, but the issue is, what are you playing for? If you want to build something that's massive and horizontal, we tend to like low price, take rate, et cetera, and scale as quickly as you can. And the way that you drive take rate over time is through adoption of other services.
It's a lot more to the SaaS business than it does to the service business, because, it's for a lot of PMCs very challenging to motivate investors to look at the space, not just because of Vakasa, because of the unit economics and the metrics and the fragmentation of the market. And at the end of the day, the large OTAs have made the PMCs glorified cleaners, right? So you're investing into a cleaning business.
Yeah, but I'm just saying every market evolves over time. Like the same strategies, like, again, if you go back, TCV in 95, 96, 97, like we were investing in things that were benefiting from the fact that at the time, online travel purchases were 6% of the total. You can ride that wave. When that wave's over, it's not saying that's a bad business, but the investment is going to be very different, right? Like that's the guys that are investing in just things that are like that are slower growing, profitable businesses. That's like a value investing game, right? It's the same thing here. Totally agree. Like some of the models that worked initially, like you have enough supply online, you have penetration. It is not a unknown market. So now the question is, how do you help those markets act more efficiently? And by the way, one of the dynamics, and this is one of the things that a lot of the software companies are trying to do, which is how do you help a small operator that can increase the percentage of revenues and bookings that come direct or don't just come through VRBO and Airbnb. It's an evolution that's the same. Look at the hotels. You talk to these independent hotels, if you look at where their customers come from, we were invested in SiteMinder in the channel management space. The two biggest areas are Booking and Expedia. Now, it's great. You can keep your occupancy up. Those are higher cost channels. You don't actually have all the information with the customer that you need to market to them. That's why there's this push on supplier direct. Like, how do I control my own destiny? Like, this is just the next evolution of where a market is. So the opportunities are there. It's just they don't look like they did from an investment standpoint when the market was, nascent.
Yeah, absolutely. And with that said, I think we can go and scratch on our last topic today because we need to be mindful of time, but you've already alluded to it. And I had several conversations in previous podcasts that we're talking about how is demand going to be generated in the future with the impact of AI. Today's world, you go out and say, hey, I want a family-friendly home, 3 bedrooms, close to the beach with a pool, and next to a cafe, find me something. This is not search. This is a curated suggestion that will come from AI. Would you still invest into Airbnb today?
Yes. So here, I think, you can look at AI in a couple of ways, right? You can look at it as if you are a company that has deep customer relationships and tons of context. If you leverage AI, that'll help, that's the AI-driven personalization, which can improve the experience both for your suppliers, so your hosts, as well as your travelers. But there is always the risk that either a new entrant that's AI first, or the dynamic of AI itself, like ChatGPT being the new OTA. So I still believe that. And by the way, for some transactions, if all you want is a flight, why not? I was invested in Sidestep and Kayak on the metasearch side. It was just the quickest answer to the question of what your options are for some of the other things the OTAs did. So like if you're not careful, like that just the things that are core search, those could move from search and the like meta search platforms over to AI. Steve Hafner is not sitting still, so I'd also put my money on Kayak and Booking to be a big player there. But if you think you have an incumbency position and you're slow to invest in AI, do that at your peril. And I think about the same thing with the big players on the alternative lodging space. All of this should be positive to property owners because maybe it lowers the cost of distribution, and you can make the argument that the percent of transactions that may come directly to you will increase. But I'm not ready to say all those businesses are toast because everybody's going to just go to ChatGPT or Gemini or Grok, and that's how they're going to, get all their travel. They might, but that presupposes that others are standing still, which I don't think they will.
With all your insight, Woody, and what you have seen in our space, especially as a closing question, where is this STR technology landscape in 3 years from today?
Well, so I have to believe that the technology landscape in the hotel space will evolve, right? And I think that you'll see the same thing in the STR space. You may be able to leapfrog where the hotel guys are, or you may be kind of on that same pacing. I just can't imagine that we're not going to have more adoption of technology that makes the operations and the marketing more efficient, right? So, do I think you'll get to nirvana? No, but I think you're going to make great strides. And we're still looking at solutions in that area because we think it's still a very big growth driver.
Absolutely. So that makes me very comfortable that also TCV is still looking at the space and looking at investment opportunities.
Absolutely.
I think the base remains.
Anybody that has an opportunity, please reach out to me.
Yeah, absolutely. We will do that regardless, Woody. That goes without saying. And there are many opportunities out there, also for growth capital, but also for recapitalization and for mergers as well. I think the roll-up still needs to happen. And I think we have seen some consolidation, but they were more in relation to market grabs and they were really fueled strategic. So I think that's still to happen, especially with the most recent capitalizations. I think now the ground is set for strategic acquisition versus just market grab acquisitions to expand the market share. So it's going to be definitely interesting to see how that space is evolved. Ladies and gentlemen, Woody Marshall, Technology Crossover Venture, was a great pleasure to have you. I miss these old HomeAway board meetings, but I hope that one day we will catch up in person again. Thank you, Woody, for being on STR Global Unlocked.
Thanks, Simon. Cheers.
That was STR Global Unlocked, where we say what others won't. If you got value from today's episode, send it to someone who is still playing it safe. Follow the show and get more global insight at ajlatelier.com. The globally recognized STR consultancy I founded and that proudly brings to you this show. More bold conversations are on the way, so stay tuned.